Today, I'm going to talk to you about decentralized finance, otherwise known as DeFi. If you're involved in the financial space or if you follow financial and market news, you've probably seen the term pop up. However, there aren't too many good explainer articles or videos that aren't jargon heavy, that aren't numbers heavy, that don't overcomplicate the concept. The idea is actually really simple. The benefit of DeFi theoretically is that you are able to remove intermediaries and extra pricing and poor technology from financial transactions. Now, this may sound complex, the idea of decentralizing finance and creating DeFi technology to conduct financial transactions. It sounds more complex than it is. It's really just based on the existing structure of finance and attempting to remove intermediaries. And that can improve profit, that can improve the speed at which you can conduct transactions, that can improve the autonomy of those engaged in these transactions, because they're primarily being done in Ethereum or other cryptos. But basically the idea, again, is just tied to the benefits of what finance offers us today and just making it simpler and more efficient. Now, there are layers of complexity. You can say, well, I don't know what the blockchain is, or I don't know how cryptos fit in. Well, blockchain is technology that allows you, if you choose to, it doesn't have to be this way, but allows you to develop a system that is decentralized. And let's explain what decentralized is. It basically means that there is no central organization that is managing the operation of a blockchain. So, for example, in centralized or traditional finance, you have a bank, you have brokers, etc., and they are the central entities. They are the parties to transactions, two of the three parties to transactions, with the end customer being the third. With decentralized finance, the entity that essentially replaces the bank and the broker is run on a blockchain. So it's basically you use cryptocurrencies in order to conduct activity that you would do traditionally, be it loaning, be it borrowing, etc. You can actually just do that through cryptocurrencies. And generally, again, this is being done through Ethereum. And so what you'll do is you would put your US dollars, or theoretically other types of currency, into Ethereum. And then through a DeFi platform, MakerDAO is probably the biggest one, and there's many billions of dollars involved in these entities that are popping up in the DeFi space. But you'd put money in there, and then you could do things with it. You can do what's called yield farming, where you basically loan money and expect to get a return from the fees and speculation income associated with what people do with cryptocurrency nowadays. So again, none of this is a new concept. You have all these marketing buzzwords, and the boxing lover in me appreciates the promotion and everything of this, but I think it overcomplicates it. I think if you've seen my past videos on items like NFTs, you know I believe strongly in the current and future potential utility of cryptocurrencies, of blockchain technology. I don't own cryptos, I don't invest in blockchain technology personally, but I have an interest as a former software developer. And I like to focus on the utility because it shows people who are more traditional, but have money to invest in new products and get involved in new technology. I want to be able to show them that there are benefits to this technology that's popping up. Yes, there are crooks, there are scammers, there are hucksters, but those exist in traditional finance as well. So I don't think that's anything new. I think there's nothing new under the sun. People can be corrupt in different ways, and of course that's going to go for cryptos and blockchain technology, but there's nothing inherently corrupt about them. And I think, frankly, the decentralized nature of this technology is what makes it so powerful. It really opens up access to financial transactions, for example. You don't need to work with a broker. You don't need to work with a big bank to get a loan approved necessarily. So it's very deregulated. There's risk with that and so forth. But if you could borrow crypto the same way you borrow dollars, but there's less regulation, less headaches involved, then potentially you could get a better interest rate because the cost of doing business is lower. And that's part of where an interest rate can be derived. It's like, if it's a really difficult loan to place, then you're going to have a higher interest rate, for example, if you have bad credit and so forth. Or if you're just new to borrowing, this stuff can impact it. And by removing these layers, it's possible that this will actually improve efficiency, improve borrowing rates, and so forth. And you can also potentially convert, I don't know to what extent platforms are going to continue to allow this or would allow this currently, but you could potentially convert the crypto that you're borrowing into dollars. Like you could borrow, theoretically, you could borrow X amount of money in Ethereum, convert it to dollars, purchase a house, and then have that loan remaining and that you have to replace eventually, that you have to pay back. So there's interesting concepts. There's also the idea of, well, traditional financial firms are not going to allow this. Well, they can try to fight it, but I think what they're going to end up doing is realizing that through lending mechanisms, through things like yield farming, they can remain central to these transactions without being the managing entity that is allowing for these transactions and being regulated to while conducting them. So I think they've got the capital. Some of these entities, I don't know what big banks want to do this yet. Some will start to put money into DeFi technology even more than they have. They've already got the fintech space, and really a lot of that is just improving functionality within firms. But DeFi is a fundamentally different, that's becoming its own industry. But again, if you've got the capital at present, putting it into crypto and then using it to lend and so forth, and potentially influencing the way that these loans are working and that what you can do with lent crypto, that could really empower these institutions and help to fund and fuel the growth of the DeFi space. So it's going to be very interesting, but hopefully now you have an idea that DeFi is basically just an abstraction away from one level or so away from the current financial institutional structure. So it's not a new concept, really. It's basically, throughout history, there have been centralized and decentralized ways of conducting financial transactions. And we've, in recent memory, moved really into being centralized. You've got a central bank, you've got banks that lend and conduct transactions and so forth, and brokers who are involved there. So that's where we are now, but that doesn't mean it's always how it's going to be. So there's a lot of opportunity in this space, but it requires those with capital, which are typically older and traditional people and firms, to feel comfortable with this new technology and what it means for the future and how it can profit them in the future. So again, hopefully this makes a little more sense when you're seeing DeFi out there. I don't expect you to be an expert yet, but I may continue doing these videos to expand on this topic and help shed some light in normal terms onto what the hell's going on in the crypto space. So thank you for watching.